Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's Daily Market Update. Leading market news overnight was the retail sales data coming out of the US. Core retail sales fell by 1% from a month ago, which is a big disappointment to the market, which had been expecting the Christmas period figures to show a bit of growth. Unsurprisingly, the US dollar fell on the news, and the market will now look ahead to the economic news out later today. Unemployment claims are expected to be stronger than last month, and I think this is likely given the robust employment figures we have seen recently. And looking now at the pound, there was plenty of demand after the Bank of England Governor Mark Carney said interest rates will increase, likely at a gradual and limited pace. This is opposite of what we were predicting based on the recent disappointing inflation figures. It seems low inflation is not too much of an issue for the Bank of England, however, they'll need to be careful that they don't cause deflation. And oil was once again the big mover today, however this time it was a strong positive move. Today is an options expiry day, which caused anyone short to cover their positions, providing bullish support. This in turn triggered a number of stop losses, adding to the upward momentum which saw oil jump over $3 a barrel. The fundamentals still look bearish for oil. Overnight we saw crude inventories jump by 5.39 million barrels, showing there is no shortage of supply. And finally today, the European Central Bank is likely to introduce quantitative easing. The EU Court of Justice was asked to rule on the legality of the outright monetary transaction program, which was introduced by Draghi in 2012. This program is seen as a predecessor to QE, which Draghi is expected to announce this month. The court issued an opinion which said the program was in principle in line with the ECB's mandate, opening the door for Draghi to implement QE. That's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.